Mr. Mukherjee, good having you. Thanks so much for joining in. Um, in fact, the question really that comes in for Amitava Mukherjee is really this, that when he spoke to me earlier in the day or earlier in the week, what is it that he believes will happen to these things going ahead? Let's listen to that.
I think the stimulus that the Chinese government has actually injected into the economy is at least will give long-term relief to the rather unpredictable market that had become, and mostly it was sliding down, both in terms of steel and consequently in terms of iron ore prices. So I think now the effect has been seen a little bit in terms of iron ore prices moving up north slightly, and we hope that it will be more stable in the days to come. But so far as iron ore is concerned, we must remember that the game changer in China has been the centralized procurement mechanism that they have for the long-term agreements. The spot and the port sales are still continuing in the, as it were. But in terms of the centralized procurement for the long term, I think that would have had an effect previously on the international markets. But India generally is insulated from the international market prices, unless, of course, the international market, prices come down very, very substantially to the level of around $65. Indian market remains insulated as Indian ore is available at a much more discounted price as compared to the international market, which has always been the case.
Okay. So what is it that you would watch out for? What is it that people who are watching out for or watchers should think of when it comes to this? Because the Chinese moves seem fairly unpredictable, at least to us sitting out here in the studios on this side of the fence. When you look at this, how do you think of what could happen to business in the next 6 to 9 to 12 odd months?
Well, I'm no China expert, but the fact is that whatever they do affect our business, especially in steel and iron ore, especially when there is a problem. When the market goes good, then it's fine. But in a problem era, of course, the prices, when especially they are decreasing a lot. I think that decrease has been arrested, as it can be seen even in Indian steel prices going up across the board, except for HRC, where there is still a problem huge problem of imports, which keeps the prices down, and also the international market being flooded by the Chinese product. So except for the HRC, I think the market has more or less stabilized. Last 2 weeks, we have seen pellets prices going up, the intermediate prices like blooms and others going up, the long products going up, but there has been hardly any movement on the flat products. Given that, we have been able to take a price increase about 7-8 days back, which is about 8-10 days back. So that has been the early, what I can say, I hope it is the light at the end of the tunnel, so as to say.
Okay. So would you reckon that there is a higher probability of stability and maybe a slightly more better predictability or range-bound move as opposed to fairly choppy moves in steel and iron ore because of what you just said?
Yeah, for iron ore, yes, I think you are right. I would presume that the worst is over. With the Chinese stimulus, I think they will have a better domestic market. A better domestic market means more demand for iron ore internationally, and of course that will, of course, give a stability to the international market and consequently to the Indian market. Although I would again say that the international market and the domestic market, they are fairly insulated from each other, especially when.
Yeah, but okay, I buy your point. I know I can't talk too many numbers with you, Mr. Mukherjee, so we'll probably talk about those once the quarterly numbers are out. But I will take the opportunity to ask you a few things around your capex as well, because it's a large one that has been announced. When does this How does this get funded? What does NMDC post capex look like versus what it is looking right now?
Yeah, this year our capex guidance is 2,200 crores. So that we will easily achieve. We have already achieved around 700 crores in the H1, and H2, well, I think we'll be easily achieving the next. Apart from that, we have spent around 1,500 crores in acquisition of a very strategic piece of land in Vizag, where we expect to terminate our slurry pipeline and build a pellet plant and also have a major blending yard there. So these are the two major highlights of capex. I think we should end up at around 4,000 mark for this year, 4,000 crores of capex and by the end of this year, including the acquisition of the land. Next 5 years, we have a substantial capex plan. We plan to spend around 70,000 crores, 70 to 75,000 crores to take our capacity to about 100 million ton by the end of the decade, and which will require a substantial investment in terms of marketing infrastructure as well and dispatch infrastructure as well. So we are planning it. We have cataloged the various investment that is required. These are at various stages of approval. Some have been approved, some are going to be approved, and some are, for some, the DPR, etc., are being prepared and will be taken to the board for approval. But going forward, we have huge capex plan, and that is essentially required to more than double our capacities by the end of the decade to about 100 million ton.
Okay, so you double capacities over the course of the next 6 years. This
Yes.
whole capex, Mr. Mukherjee, funded via internal accruals and cash flows, or would you need to raise any equity capital?
I don't think we would require to raise an equity capital. Our internal accruals should be adequate. Right now, we have a cash balance of around, I think, 13,000-14,000 crores, which going as we go on increasing our production also, we expect our internal accruals to increase, and we don't see any need to even hopefully will not require to borrow also. We should be able to fund this through our internal accruals in the next 5 to 6 years.
So what does this new capex do? I mean, one is you told me that the capacity doubles. So straight away prices being, I mean, ceteris paribus, the size of the company doubles. But that is only in revenue terms. When I looked at your numbers relative to what's happened in the past, over the last 10 years maybe, your operating margins are probably at the lowest level that they have been in the last 10 years too. And correct me if I'm wrong here, but at least my numbers show me that. So my question to you is, as you are trying to do a slew of things here in terms of expanding capacity, improving efficiencies, etc., can these operational metrics also improve with new capacities coming on stream?
Oh yes, we'll get huge efficiencies of scale. Just to get the things in right perspective, of course, if you see last decade's figures, our EBITDA has come down from the earlier 80% to around 40%. But this is mostly due to taxes and not due to efficiency factors. You see the taxes which were earlier on specific basis, now the royalty is around 20%, and we still have to pay 22.5% of additional royalty. So 43 to 44% goes straight away in taxes and duties straight away. So that is the reason where the EBITDA margins have fallen, and it has now stabilized at around 38 to 41%, which I believe is a very, very healthy EBITDA even with these taxes. If you see our efficiency parameters, whether it is output per shift of manpower or whatever, in any parameters, if you see, our efficiencies have grown up hugely. Last 5 years, our manpower have declined, but our production have gone up by 20%. So all operating parameters, we've been doing excellent. And that is why I believe that when we double our capacities, our profitability will increase by equally, by at least 2x, if not more. Remember, this industry, the mining industry, is essentially a fixed cost industry. So once you recover your fixed cost, most of your revenue after paying off taxes, well, they may be as high as 45 to 50%. But after paying your taxes, account for your margins. So once we are increasing our capacity by almost doubling it, I think our profitability will be more than 2x. That's the sort of maths that can be easily verified.
Yeah, great to know. When do you expect the slurry pipeline, new processing plants to be commissioned? Part one of my question is that. And just for FY25, what are the capacity and the production targets, Mr. Mukherjee?
Yeah, I'll take the major projects first. As you said, by slurry pipeline, we are trying and we are targeting to complete it by December next year, 25. December 25, we should be able to complete that. And it has, as you know, three major projects. One is the pellet plant at the tail end, the slurry pipeline itself, about 131 kilometers, and the beneficiation plant at the head end. So all these three should be completed together, some a little earlier, but I think the latest completion, what we are targeting is at December 25. Similarly, the screening plant of Kirandul, which is a 12 million ton screening plant, we plan to complete that by January or March 26. So these are the two major projects that we would be completing in the next year or year and a half. That's the first part of the question. The second part of the question, you said about guidance about what sort of volumes we are having at for FY25. We are hoping that we'll be touching around 50 million ton, give or take a couple of million ton this side or that. But 50 million ton is what we are working towards. And we hope that we should be able to achieve it this year.
Which is good to know. And, I really hope that all of what you said turns out to be even better, because it'll be great to see, for example, because of the taxes, the PAT number looks caught in this range of 6,000 odd crore. It'll be great to see that break out as well. So I wish you all the best for that, Mr. Mukherjee. One final question, if you will, because I know I can't ask you specific numbers, but the mineral tax announcement, is that a dampener, or does it remain to be seen? How do you read into it?
So far as my particular company or my company is concerned, NMDC is concerned, we do not have a major impact of that. Two reasons. One is our prices are very clear. It is exclusive of taxes and duties, and whatever is inclusive as on that day. So ours is mostly recoverable from our customers. The second advantage is that our 80% sale is to 3 or 4 major customers, which were existing then and which are already with us today and which will be there with us tomorrow. So I don't think that in terms of a major setback that would be this company will be faced with, I don't think so that's going to happen. Because most of it is recoverable, and because even if it is to be paid, it is to be paid in 12 installment. I don't think it is recovery would be a major issue. Of course, as an input cost to the customers, it goes up by the amount of taxes and duties that is there. In Karnataka, of course, substantial amount has already been paid earlier during the regime of the monitoring committee. So to that extent, even our customers are insulated to that extent of the payment that has already been made for the last, in the intervening 5 or 6 years. So as far as our company is concerned, we do not have much of a risk exposure so far as this retrospective taxation is concerned.